They said Dubai was unstoppable, a city that turned sand into glass, oil into infinity, ambition into skyline. But tonight, something doesn't add up. The lights are still on. The fountains still dance. The luxury cars still glide past marble entrances. And yet, it feels quieter than it should be. Not empty in the way people imagine. Not abandoned. Not collapsed. Just missing something. A rhythm. A density. A presence that used to define it. Because Dubai was never supposed to slow down. It was engineered to accelerate forever. So why does it now feel like a system still running, after something critical has already left? From the outside, nothing is wrong. Tourism numbers still make headlines. Influencers still frame it as a playground for the ultra-wealthy. Mega projects continue to get announced with cinematic confidence. On camera, Dubai remains perfect. But step off the curated lens, and a different pattern begins to emerge. Luxury apartments occupied but dark. Restaurants open but quieter. Entire districts active but not alive. It's subtle, almost deniable. And that's exactly why it matters. Because the most dangerous economic shifts don't happen when everything breaks. They happen when everything still looks like it works. Before we go deeper into what's actually happening beneath the surface, and why this might be one of the most misunderstood economic stories unfolding right now. If you're drawn to deep, analytical breakdowns like this, where we go beyond headlines and uncover the structural forces shaping global power, make sure to subscribe. Because what's happening in Dubai is not just about Dubai. To understand the silence, you first have to understand the illusion. Because Dubai didn't just grow. It accelerated unnaturally fast. In less than half a century, it transformed from a modest trading port into one of the most recognizable economic hubs on the planet. Not through gradual industrialization. Not through slow institutional layering like traditional economies. But through something far more aggressive. Positioning. Dubai positioned itself as the ultimate intersection point. Between East and West. Between capital and opportunity. Between regulation and freedom. It didn't try to compete with established economies. It rewrote the rules entirely. Zero income tax. Business-friendly regulations. Strategic geography connecting Europe, Asia, and Africa. And most importantly,
So
speed.
this is 1080p,
While other cities
60
debated
frames per
policy,
second with
Dubai
a rock
executed.
steady enabled.
While others regulated, Dubai
Currently we are
invited.
in Sheikh Zayed
And while
in
legacy
Dubai,
economies moved cautiously,
famous business district
Dubai
here
built
in
vertically
this country.
and relentlessly. The
This is
skyline
during the
wasn't just
lockdown.
architecture. It was messaging. Every tower, every artificial island, every mega project sent the same signal. The future is happening here. And capital listened. Money began to flow in, not slowly but in waves. Global investors, corporations, high net worth individuals, all drawn by the same promise. A place where wealth could move freely, grow rapidly, and remain largely untouched. Dubai became more than a city. It became a financial gateway. A place where capital didn't just exist. It passed through. And that distinction is everything. Because cities built on production behave differently than cities built on movement. New York produces finance. London produces services. Tokyo produces industry. Dubai. Dubai facilitates. It hosts. It channels. It amplifies. But it doesn't anchor capital in the same way. And for a long time, that didn't matter. because the flow never stopped. Even during global uncertainty, Dubai found ways to adapt. After the 2008 financial crisis, when its property market nearly collapsed under the weight of its own expansion, it didn't disappear. It restructured. It recalibrated. It came back, stronger, faster, more aggressive. Debt was quietly reorganized. Confidence was carefully restored. And the narrative continued. Because perception in Dubai has always been as important as reality. By the 2010s, the formula was clear. Build bigger. Move faster. Attract more. And it worked. Record-breaking skyscrapers. Luxury tourism booms. A reputation as a safe haven for global elites. Even geopolitical instability in other regions often translated into opportunity for Dubai. Capital fleeing uncertainty needed somewhere to go. Dubai was ready. But here's the part no one talks about. What happens when your entire system depends on movement, and that movement begins to change direction? Not stop, not collapse, just shift. Quietly, gradually, almost invisibly, because the same forces that built Dubai, speed, openness, fluid capital, also make it uniquely vulnerable. Not to destruction, but to absence. And absence doesn't make noise. It doesn't trigger alarms. It doesn't create headlines overnight. It just leaves behind something harder to detect. A city that still functions, but feels like it's operating with less than it used to have. And that brings us back to the paradox. Dubai isn't failing. The lights are still on. The infrastructure still works. The image is still intact. But beneath that, there are signals, subtle ones, in occupancy patterns, in capital flows, in who is arriving and who is quietly leaving. And to understand those signals, we have to go deeper, beyond the surface illusion, beyond the success story, into the layer no one advertises. The layer built not just on ambition, but on something far more fragile. Debt. Not the kind that headlines panic about, but the kind that hides inside systems, inside growth, inside momentum itself. In the next part, we'll begin peeling that layer back. And what it reveals changes how you see everything. The story you've been told about Dubai is simple. Vision, execution, success. But beneath that narrative, there's an engine. Invisible, complex, and rarely discussed in full. Debt, not as a failure, not as a crisis, but as a strategy. Because Dubai didn't just build fast. It borrowed the future to do it. Every skyline-defining project, every artificial island, every luxury district rising from the desert wasn't just funded by wealth. It was leveraged into existence. This is where the illusion deepens. Because in traditional economies, debt often signals risk. But in Dubai's model, debt became fuel, a mechanism to compress decades of growth into years, a way to build not based on current demand, but on anticipated demand. Think about that for a moment. Entire districts constructed before they were needed. Supply created before demand fully materialized. Not by accident, but by design. Because Dubai wasn't reacting to growth. It was trying to outrun time itself. And for a while, it worked perfectly. Investors saw opportunity. Banks saw momentum. Global capital saw returns. Money flowed into finance projects. which attracted more attention, which brought in more money. A feedback loop, self-reinforcing, self-expanding. But here's the problem with systems like this. They don't just depend on growth. They depend on continuous belief in growth. Because when you build ahead of demand, you are making a silent assumption that the future will arrive exactly as expected, that buyers will come, that capital will keep flowing, that confidence will remain intact. And when that assumption holds, the system looks unstoppable. But when it starts to wobble, even slightly, everything becomes more fragile than it appears. We've seen this before. In 2008, Dubai came dangerously close to discovering the limits of its own model. Property prices collapsed. Liquidity dried up. Debt obligations loomed. For a moment, the illusion cracked, but the collapse never fully materialized. Why? Because intervention arrived just in time. Support from neighboring Emirates, strategic restructuring, a controlled narrative. The system didn't break. It adapted. And in doing so, it became something even more refined. Not less dependent on debt, but better at managing its perception. Because here's what most people miss. Dubai doesn't need to eliminate risk.
This is
It just needs to stay
1080p,
ahead
60
of it.
frames per second.
Which brings us to the
with
present.
Rocksteady
On paper,
enabled.
Dubai still thrives. New developments
Currently, we are
continue
in
to
Sheikh
launch.
Zayed in Dubai.
Real estate markets show
Famous
resilience.
business district here.
Luxury demand appears strong. But look closer,
During the lockdown.
and the structure begins to reveal its complexity. Many properties are not owned in the traditional sense. They are held as assets in motion. Bought, sold, flipped, repositioned. Sometimes occupied. Often not. Because in a system driven by capital flows, ownership is less about living and more about positioning. This is why you can have a city that looks full, but feels empty. Because presence is not the same as participation. A luxury apartment may be owned, but not lived in. A tower may be completed, but not fully utilized. An entire district may exist, but function below its apparent capacity. Not because demand doesn't exist, but because demand is conditional. Conditional on capital continuing to move. Conditional on geopolitical stability elsewhere. Conditional on Dubai remaining attractive relative to alternatives. And that's where things begin to shift. Not collapse. Shift. Because global capital today is more mobile than ever. It doesn't stay. It searches for safety, for opportunity, for advantage. And when conditions change, even slightly, it moves again. This is the hidden vulnerability. Not debt itself, but what debt is tied to. In Dubai's case, debt is tied to a system that depends on external flows. Flows that are influenced by forces far beyond the city itself. Global interest rates, geopolitical tensions, regulatory shifts in other countries, sanctions, currency pressures. Dubai doesn't control these variables. It responds to them, which means its stability is not entirely internal. It's imported, and imported stability is never permanent. Right now, the system is still functioning. Projects are still launching. Investors are still arriving. The narrative still holds. But beneath that, there are signs of recalibration. Capital becoming more selective. Buyers becoming more strategic. Flows becoming less predictable. Not disappearing, just less certain. And in a system built on acceleration, uncertainty is friction. It slows decisions. delays investments, alters expectations, and when enough friction accumulates, the system doesn't crash. It loses momentum. That's the stage Dubai may be entering now. Not a collapse, not a crisis, but something far more subtle. A deceleration disguised as stability. Which brings us to the deeper layer. Because debt and capital flows explain how the system operates, but they don't fully explain why it feels different now. For that, we need to look beyond economics, into something less visible, but just as powerful. People. Not just who is there, but who is. Because Dubai was never just built on money. It was built on a very specific type of population. A population that doesn't stay. And when that population begins to shift, everything else follows. In the next part, we'll uncover the human layer of this system. The transient workforce, the temporary elite, the residents who were never meant to become permanent, and why a city built on people who don't stay may always carry the risk of feeling empty, even when it is. Dubai was never designed to be a traditional city, not in the way history usually builds them. There is no deep-rooted middle class that evolved over generations. No organic layering of communities forming identity over time. No slow accumulation of culture tied to permanence. Instead, Dubai engineered something entirely different. A transient population system. Look at the numbers beneath the surface. A vast majority of the people who live in Dubai are not citizens. They are expatriates, temporary residents, contract-based professionals, capital-driven migrants, people who came for opportunity, but were never meant to stay forever. This is not a flaw. It's part of the design. Because a transient population is flexible. It scales up when the economy expands. It contracts when conditions tighten. It doesn't demand long-term social integration. It doesn't anchor itself politically. It moves. And that movement, for years, was an advantage. When capital surged into Dubai, people followed. Construction workers, engineers, consultants, executives, entrepreneurs, all arriving in waves to participate in growth. The city expanded. The skyline rose. The system accelerated. But here, the hidden cost of that model. A population that is built to arrive quickly is also built to leave just as quickly. Because when people don't belong permanently, their relationship with the city changes. They don't invest emotionally. They don't embed themselves structurally. They don't build roots that hold them in place. They optimize for income, for opportunity, for timing, and when better opportunities appear elsewhere, they move. This is the layer most narratives ignore. Because from the outside, population numbers can look stable, even growing. But stability in numbers does not equal stability in presence. A city can maintain its population while constantly replacing the people inside it. And when that happens, you get something unusual. A place that is full, but never truly settled. That's the feeling. That subtle absence. Not of people, but of permanence. Walk through certain districts at night. Everything is operational. The infrastructure works. The lighting is perfect. But something feels interchangeable. Because it is. The residents change. The purpose shifts. The energy resets. Again and again. And under normal conditions. This constant churn is invisible. Because it's masked by growth. New arrivals replace departures. New investments replace exits. New demand replaces fatting interest.
So this is
The system
1080p,
refreshes itself
60 frames per
continuously.
second with
But when the inflow
rock
slows,
steady enabled.
even slightly, the illusion begins to
Currently we are
thin,
in Sheikh Zayed,
not
in
collapse,
Dubai,
not break,
famous business district
just
here
reveal.
in this country.
Suddenly, the replacements don't come as
This is
quickly.
during the lockdown.
The turnover becomes more noticeable. The gaps, however small, start to accumulate. A luxury apartment stays empty longer. A restaurant sees fewer repeat customers. A business district feels less dense at peak hours. Individually, these signals mean nothing. Collectively, they begin to form a pattern. And patterns are where perception shifts. Because Dubai doesn't rely on permanence. It relies on constant replenishment. And replenishment depends on one thing: being more attractive than every alternative. But the global landscape is changing. Other cities are competing more aggressively for capital and talent. Regulatory environments are evolving. Tax advantages are being reassessed worldwide. Geopolitical alignments are shifting. Which means Dubai is no longer operating in the same environment that fueled its rise. It's still competitive, still attractive, still functioning. But now, it's part of a more contested system. And in contested systems, marginal changes matter. A slightly better offer elsewhere. A slightly lower risk profile in another region. A slightly more stable regulatory environment. That's all it takes for mobile populations to reconsider. Not all at once, not dramatically, but gradually. And gradual shifts are the hardest to detect because they don't trigger alarms. They don't create headlines. They don't feel like events. They feel like less crowded, less urgent, less dense, not empty, just not what it used to be. And when you combine that with everything we've already uncovered, the debt-driven acceleration, the reliance on external capital flows, the dependence on a transient population, a deeper picture begins to form. Dubai is not just a city. It's a system of movement. Money moves in. People move in. Opportunities expand. Then, money reallocates. People relocate. Momentum adjusts. The system doesn't collapse. It oscillates. But here's the critical question. What happens when multiple layers begin to shift at the same time? When capital becomes more selective? When debt becomes more sensitive to global conditions? When people become more mobile and more cautious? You don't get a crash. You get something far more ambiguous. A city that continues to operate, but begins to feel like it's running on a slightly lower frequency. And that's where we are now. Not at the end of the story, but at a transition point. Because what we're witnessing in Dubai may not be a failure. It may be something else entirely. A recalibration of a model that was never designed for permanence. A system built on speed, learning what happens when speed meets friction. And the real question is no longer, is Dubai collapsing? But something far more complex. What does a city built on movement become when the movement changes? In the final part, we'll step back and connect every layer. From illusion, to debt, to people, to reveal the deeper structure behind it all. And what it might mean not just for Dubai, but for every modern city trying to replicate its model. Because this isn't just a story about one place. It's a preview of what happens when growth itself becomes the illusion. At this point, the pattern is no longer random. It's structural. What began as a faint inconsistency, empty feeling spaces in a city that appears full, has now revealed something deeper. Dubai is not collapsing. It is exposing the limits of its own design. Because every system, no matter how advanced, is shaped by the assumptions it was built on. And Dubai's core assumption was simple. That movement would never stop. Capital would keep flowing. People would keep arriving. Demand would keep expanding. And as long as those conditions held, debt could be managed, growth could be sustained, and perception could remain intact. But now, for the first time in decades, those assumptions are being tested simultaneously. Not broken, tested. And that distinction matters, because systems don't fail when pressure appears. They fail when pressure reveals something they were never designed to handle. Dubai was designed for acceleration, not for stagnation, not for prolonged uncertainty, not for a world where capital hesitates instead of rushes. And yet, that is exactly the environment emerging today. Global capital is no longer moving with the same urgency. Interest rates are no longer universally low. Risk is being priced differently. Geopolitical alignments are shifting in unpredictable ways. Money still moves, but it moves more carefully. And careful capital behaves very differently. From aggressive capital, it waits, it analyzes, it delays, which introduces something Dubai's model has very little tolerance for. Time, because the entire system was optimized to compress time, to build faster than demand, to grow ahead of reality, to turn future expectations into present structures. But when time stretches, when decisions slow, when flows hesitate, that compression begins to unwind. Not violently, but subtly. Projects take longer to fill. Returns take longer to materialize. Confidence takes longer to rebuild. And when that happens, the illusion doesn't shatter. It fades. This is the final layer, the one that ties everything together. Dubai is not just built on debt. It is built on projected certainty. Certainty that demand will arrive. Certainty that capital will continue. Certainty that people will come and stay long enough to sustain the system. And when certainty weakens, even slightly, everything built on top of it becomes conditional. This is why the city still functions, why the lights remain on, why the skyline still impresses. Because the system hasn't failed.
This is 1080p,
It's still being
60 frames per
supported
second
by momentum
with
built
a
over decades.
Rocksteady enabled.
But momentum is not permanent.
Currently
It
we are in
decays,
Sheikh Zayed in
slowly,
Dubai,
quietly,
famous business
almost
district here
invisibly,
in this country.
until one day
This is
you
during
realize the
lockdown.
system is no longer accelerating. It's just maintaining. And maintenance is a very different phase. From growth, growth attracts attention. Maintenance preserves illusion. And illusion, when maintained long enough, can begin to feel like reality. But beneath that surface, the structure is changing. Dubai is entering a phase that few of its narratives acknowledge. Not expansion, not collapse, transition, a shift from aggressive growth to strategic positioning, from rapid inflows to selective capital, from constant replenishment to managed sustainability. And that transition is where uncertainty lives, because no one knows exactly what this model looks like. Without continuous acceleration, can a city designed for movement adapt to slower flows? Can a system built on temporary populations create long-term stability? Can debt-driven expansion sustain itself when growth becomes less predictable? These are not questions with immediate answers. And that's what makes this moment significant. Because Dubai is no longer just a symbol of success. It is becoming a test case, a real-time experiment in what happens when the fastest-growing systems encounter the limits of speed. And the outcome will not just define Dubai. It will signal something much larger. Because across the world, other cities are trying to replicate this model. Attract capital, accelerate growth, build ahead of demand. But if Dubai, the most refined version of that strategy, begins to slow, what does that mean for everyone else following behind? And this is where the story turns back to you. Because what you're seeing is not just an isolated phenomenon. It's a shift in how modern economies operate. A shift from certainty to conditionality, from speed to selectivity, from expansion to recalibration. Dubai just happens to be where it's most visible. So the next time you see the skyline, perfect, illuminated, untouched, remember what's beneath it. Not failure, not collapse, but something far more complex. A system still running, while quietly adjusting to a world that no longer moves the way it used to. And the real question isn't whether Dubai will survive. It's this: what will it become when the illusion of endless growth finally disappears? If you've made it this far, you're already thinking differently than most. This channel exists for exactly that reason: to go beyond the surface and break down the systems shaping our world. So if you want more deep, analytical explorations like this, subscribe and share your perspective below. Because the most important insights don't come from watching, they come from questioning. And right now, Dubai is giving us one of the most important questions of all. If a city is built on movement, what replaces it? When the movement changes,